I never really had the classic struggle. I had faith. Denzel Washington. I love that quote. Faith, my friends, 10 to 15 minutes each and every day shows your faith. If you are faithful, you will learn how to chart these markets. Why is that? Because 10 to 15 minutes a day will give you the learning of the nuances that you need to understand how price movement flows back and forth. Fear and greed in the marketplace, finding weekly vertical crossovers that work for you. That is what we are all about. Primarily weekly vertical crossovers. That's where the price percent oscillator crosses over up or down on the red signal line, which is an 8-period exponential moving average line. We also use the derivative oscillator. All of this is explained on a daily basis as we go through these charts. We have a great book. Sent out a bunch of those today. Treat yourself to a wonderful Christmas present. Follow the link in the show notes and order our book. Also, if you're not a subscriber, that's free. We want you to get the daily trainings, which will also help you hone your skill set. Today, using order size to control risk. Risk is a big, big thing in our business. We want you to learn what that's all about. Not a stock calling service, we're an education firm. We want you to practice trade as long as it takes to learn how this works. It will be worth your time and your energy. Let's jump into these charts. Everything down for the day. S&P 500 down about 0.90%. The NASDAQ 100 way down 2.26%. Bonds down a little bit, 0.33. Gold pulling back 1.71% down. We'll talk about all these as we jump into them. Let's start off as we always do with the S&P 500. So far, looks like a decent week. Green up candle, things moving up. But look at that price percent oscillator. It was heading up. Lost a lot of energy over the course of the day and so far throughout this week. But we're seeing, again, I'm looking at the price percent oscillator, the angle it was heading up and how it's flattening. Derivative oscillator still gaining upward momentum, but again, that Heikin-Ashi candlestick still looks pretty good. 2-day chart, look at that. We see where it's weakening. Now remember, prior 2-day candle represented Friday and Monday. This latest one is now finished drawing. Looked like it was going to be a green candle, but it's turned into a red open box candle. Right there on the 2-day trend line, trying to move through it. So again, still positive, but weakening. Derivative oscillator has been weakening since it peaked all the way back on Thursday, the 19th of November, where we had those 4 days of pulling back and then taking off again. Now the market can just be like it did back then. It can just be taking a break. We'll see how things continue. We can see, though, how we had the price percent oscillator on the half-day chart just barely staying above the red signal line, and then, of course, ditched over in the morning on Wednesday, further down in the afternoon. Look at that big red down candle piercing the 2-day trend line. So it's now heading down. Now, that's just the short chart, so we will pay close attention as to what happens tomorrow and Friday on this 2-day chart. Again, pay close attention to that, particularly if you're in this practice trade. You may have already taken your profits. But again, watch and see if you see strong violations of that 2-day trend line. Again, another warning bell. Things drop through and you see a crossover. That's going to get scary. So again, be in the game. Pay attention. Be doing your practice trading. Let's see how these markets continue to rumble. Look at the NASDAQ 100. We were hoping for a weekly vertical crossover with this 2.26% down. Look at what has happened. Now again, we told you guys we didn't have it confirmed. It again started moving up. Still the candle looks okay for the week, but that price percent oscillator, where is it right now? We can see that it is below the exponential 8-period moving average. I'm looking, I can't track over there because I'm pulling that up on the chart, by activating the vertical line on the chart. But if you look over to the left-hand side of the screen, you will see under the first horizontal gray bar, PPO 1024, you can see that it's 5.48. And you can see the red exponential moving average line is 5.51. So we're below that now, pulling back on that. Derivative oscillator still positive. Go to the 2-day chart. What do we see there? Like we saw on the S&P 500, we have the price percent oscillator pulling down, derivative oscillator losing momentum. Red spinning top is what we have, open box still, so a slowdown in the up movement, still above the strong 2-day trend line. So we'll continue to watch, see what there is to see there. And of course, we see things down in the morning, but really hammering down in the afternoon, pushing through the 2-day trend line. So we'll wait, watch, and see what's going on. Do pay close attention to that 2-day. Why? Because the weekly's still in a confirmed down move, and if that 2-day by Friday crosses over going down, that could be a trigger for a 2-day recross going down. We'll see how strong that is, or if this is just a blip and things start moving back up Thursday and Friday and we have a weekly vertical crossover still. We don't know. We let the wave, we let the charts lead us. We are trend followers. Now we go to 20-year bonds down. We see this week so far down candle, but not plumbing the lows of the prior week. Price percent oscillator starting to head down further. It was more flat, moving down a little more. Derivative oscillator gaining a little bit of downward momentum. That's on the weekly. The 2-day, we ended crossing over going down. How many of you were paying attention to that? That we talked about that yesterday. Pretty weak. It's a green open box spinning top. But again, it is a 2-day crossover, a 2-day recross going down. We'll see how that sets up for us. Again, we do have another 2-day candle this week, but we will go ahead and draw that 2-day trend line as best we can, and we will see just where things go for us as the week continues. But we did have that 2-day recross, talked about it yesterday, being potentially a weak one. Number of reasons why not to get into it, but again, it's going to be based what? On your backtracking and your prior practice with TLT, or maybe you're just in the middle of that learning curve and you're practice trading this to see what there is to learn. What do we see on the half-day chart? Way down in the morning, coming up a little in the afternoon. So that's where we are on bonds. Lastly, we go to gold. A big hammer down for the day, 1.71%. That green candle is turning into a spinning top, a wick on the bottom, long wick on the top, small candle at this point. Price percent oscillator heading down, derivative oscillator still negative, losing a little bit of downward momentum. Go to the 2-day, just not enough energy to cross it over going up. So we'll continue to watch, see what there is to see there. And again, we have the weekly is still in a down move. The 2-day now is still in a down move, thinking it might be crossing over going up, but not enough energy to do that. We'll continue to watch and see how the week develops, where things are going. With that down movement, after all this up movement, we just didn't have enough energy, even after it plumbing down in the morning and the afternoon, to have a crossover. So we'll continue to watch and see what gold is going to have in store for us over the next 2 days this week. Folks, that's where we are as we end the day. Lots of things to be looking for. Hope that you filled out your daily market worksheet as we were going through today's training. I'm going to put at the end of today's video the instructions on how to use a daily market worksheet, trade worksheet, and the weekly market worksheet. If you want to supercharge your training, of course, besides reading the book, those PDFs are for free in your show notes every day. If you're a subscriber, for free at chartingwealth.com. Look in your show notes. You'll see those PDFs. Print them out. Learn from the training at the end of today's video on the daily market worksheet, how to fill that out on a daily basis, how to utilize the trade worksheet. And then once a week at the close of the market on Friday, when we do the weekly review and forecast, that's when you fill out the weekly market worksheet. These things will supercharge your training. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.